Hello friends, my name is Deepak and I'm going to be your host for today's tax segment of our show. FBAR, Foreign Bank Account Reporting. It's a question that has been popping up everywhere on radio, televisions, newspapers, and several Indian folks located in the United States and India are wondering what to do with this FBAR. So to answer that question, we have invited our special guest in our studio, none other than famous certified public accountant from Fremont, Sanjeev Gupta. So let's welcome him to our show. Sanjeev ji, welcome to the show.
Thank you, Deepak ji, for providing opportunity to discuss on the show this very important aspect. I know a lot of people have questions on FBAR filings and the Form 8938, which has been added last year in a quick way without any guidance by the IRS with the tax filing of 2011. So this important topic is essential to discuss the final points where person can need to file, whether they can need to file FBAR or whether need to file the Form 8938. So we have to understand the differences. Form 8938 is useful, is to be used in those areas where if your balances in the account, I will say not income, the balances in the account in offshore, like maybe stocks, mutual funds, maybe in companies you have invested, maybe your bank balances. If the balance in those accounts are more than $100,000, if you're married filing joint, and if you're single, if it's more than $50,000 in those investments. Now the question comes in, how do you value the stock investment? The stock investment should be a fair market value as of December 31st, or it can be fair market value at any time during the year. But generally we can take the December 31st valuation, fair market value of the stocks. If it exceeds more than $50,000, if you're single, if it exceeds more than $100,000, you need to report on the FBAR. You need to report on the FBAR. You need to report on the Form 8938, both.
Sanjeev ji, let me disturb you there for a second. One of the questions which has been popping up a lot is, what if I did not sell any stocks? Let's say if I own stocks in India, but I didn't sell it for the last 3 years. Do I still need to file FBAR?
So that's a good question. So the FBAR filing is not for whether you sold anything. The FBAR filing is because you have those balances, those investments, and the balance in those accounts means the total valuation is more than $10,000 or $100,000. Then there is a need to look at the FBAR, and there is a need to look at the 8938. So when I say 8938, Form 8938 is required only if your balances in those accounts or investment values are more than $100,000, married filing joint. If the values are less than $100,000, there is no need to file the Form 8938. But there is a need to file the Form 90-22.1, which is properly known as FBAR. So definitely you need to file that Form FBAR, the 90-22.1, by June 30th. Make sure you mail it out. The mail out before June 30th. They should receive it. The Department of Treasury should receive the form by June 30th. Now a lot of people have this question: if I declare this money, or if I declare this asset, what's going to happen? Well, if you don't declare it, there's criminal prosecution there in the FBAR. They says 5 years imprisonment is there. So to avoid all those criminal penalties, not talking about civil penalties, I will talk about criminal penalties. To avoid all those criminal issues, there's a need to follow the regulations, and there's a need to find that fill that form. Now, IRS has come up with the third scheme of amnesty, which is right now going on, 2012 scheme. So they already have the 2009 scheme closed. They already have 2010 scheme closed. Now they are coming with this third one. So they are emphasizing on this disclosures. They are looking at the tax return very closely. What are being declared on the tax return, and what are being declared on the FBAR, and what has been declared on the Form 8938. So we have to be consistent in filing these forms. If we are declaring on FBAR, we have to show the interest income on the tax return. If we are filing the Form 8938, again we have to show the interest income on the tax return. And if you sold some stocks in India or anywhere outside US, any gains on those stocks that may be exempted from Indian taxes, because Indian tax laws provide that exemptions. But US taxes does not recognize those exemptions, and you are going to pay taxes on that. Now the question comes in, well, if I don't file it, what will be the scenario? Like, a lot of people ask me these questions. Well, as I said, criminal prosecution is there, and IRS has all the power in the world to go after you. So if I will tell all my clients, I will tell everybody here, please go ahead and file and Form 8938 if you are filing within that criteria. File the FBAR 90-22.1 if you file within that criteria. Don't wait for the IRS to come back after you. That's not right. You just, if you have those things, it's nothing wrong in disclosing those accounts. There's nothing wrong in filing the disclosing the interest income on those accounts. And if you have prior years, come under the amnesty scheme. That's why they are offering this scheme.
Sanjeevji, one more question. One of the common emails we receive typically in our office is, what if somebody has a property in India, and let's say the property was given to them by their parents or some relative, and they have never filed an FBAR or anything? Do they need to report that in FBAR?
That's a great question. So if somebody has a property in India, and they after that they give that property to you through a will, there's no need to file a tax return. Means you inherited that property. So when you inherit something, you don't have to pay taxes. So that's the thing we have to remember. So inheritance is there's no tax on inheritance. Earlier there used to be a tax in India, not here. So but that has been abolished in India. So there's no inheritance tax. If you inherit something, you can technically bring that money here at fair market value. So there's no need to declare anything there, but you need to have a will. You need to have some document, death certificate, some proof that this is the fair market value as on date of death, so that when you file your tax return here, when you sell something here, or when you use that money for some purpose, you have that validation done.
Sanjeevji, one more question that pops up a lot is, especially among the Indian communities, is when we send money to India for whatever reason, and especially if it's more than $10,000, isn't that income automatically reported to some sort of government agency anyway via bank?
Yeah. So this is the reporting is not on income. It's not reporting the reporting is basically to try to find out where you're putting your money into.
Okay.
So if you're transferring money to an Indian account, like you transfer money to any US bank account, right? To US, if you make any interest income, the US bank will give you a 1099 interest statement. The Indian bank's account will not issue that 1099 interest statement. For example, Oriental Bank of Commerce or any other local banks, corporation bank. But if you are in Citibank or if you have a State Bank of India, they sometimes issue 1099 interest. So that's why the IRS wants to make sure that if you're transferring money from US to any country outside US, and you're putting money in a bank, so if your balance is more than $10,000, definitely you will be making some interest income on that. So that's the whole purpose. They want to tax that interest income, because as you know, US taxes are based upon global taxation, global income taxation, not only local, not only US income. It's based upon local gross income, global income. So since a US citizen is paying tax on the interest income earned in US, same way the person who is having an account outside US, they have to report the interest income. That's the whole purpose behind it. And same thing again, if you have rental property in any country outside US, that rental property income needs to be reported in the country in which the property is located. But US also requires that income to be reported here, because being a global income. Again, if you pay any tax on that account, you get a credit for a tax here. There's a form 1116, you file it.
So there you go, friends. I'm sure we have clarified some of those FBAR questions for you. But if you're still wondering about what to do with your income in India or with your assets or bank accounts in India, definitely give Sanjeevji a call. His office number is 510-825-7563. As Sanjeevji has mentioned, FBAR is not as simple as it looks like. There are requirements for you to file a form if you make $10,000 or more bank balance in India or any other foreign countries. And there are even more requirements if you have a balance of $100,000 or more, especially with Indians having a lot of CDs and other kind of savings accounts. That $100,000 can be quickly catched up. So you need to file those forms in United States. So give Sanjeevji a call. His number is 510-825-7563, so that you can personalize that experience and kind of answer the questions in your way. You can visit him online and find more information about FBAR. That website is sanjeevcpa.com. That is all we have today in our tax segment, but we'll be back next week with more helpful tax tips. But till then, goodbye and thank you.